without fail, every day I'm asked by an old friend, whether it's an old high school friend or a university friend, hey, how do I buy crypto? Jason, there's people out there that still, for guys like you and me, it just seems uncanny, but there's people out there that think you have to buy a Bitcoin, right? There's some people that don't realize that you can actually buy, a Satoshi or what have you. So anyways, I still think while there's been more adoption and understanding, I still think that there's a lot of growth ahead of us.
Hey guys, welcome back to Off the Ledger. My next guest is a serial entrepreneur, blockchain mining, and financial markets expert, recently appointed as president and CEO of HIVE Blockchain, the first publicly traded crypto mining company. Aydin, welcome to the show.
Thank you for having me, Jason. Pleasure to be here.
So before we get into HIVE and all your amazing work, I want to take a little bit of time and get your take on what's happening in the market in the crypto space.
Yeah, I mean, for all of us that were around in 2017 when the first wave of public companies, came to light, we've seen this second wave of institutional capital come in with quite a fury. I think easily over $2 billion have been raised this year. With a lot of action in the U.S. The investment banks there have really started to take in a strong liking to crypto, and so we've seen some big NASDAQ listings, HIVE of course being one of them. And I think it's a really exciting time. I think that the investing public, I think the professional services industry, the assurance companies, the law firms, everyone's starting to get it. 4 years ago, it was very nascent, and it was something only the really techie people understood. So I think it's great. I think it's the more people that have a true intrinsic understanding of how blockchain, and at least in our sector, cryptocurrency is one facet of that, works, the better it is for all of us. So
thanks for sharing that. Some of these recent conversations I've had is interesting. Some people are relating to even their real estate effects in China and other matters may have caused some recent fluctuation. What do you think of how that relates to sort of the pricing and models that we're seeing?
I think that if anything, the more zero interest rate policy, the more inflation, the more volatility that we see in the traditional markets, the more that people will be drawn to the world of cryptocurrency. And without fail, every day I'm asked by an old friend, whether it's an old high school friend or a university friend, hey, how do I buy crypto? Jason, there's people out there that still, for guys like you and me, it just seems uncanny, but there's people out there that think you have to buy a Bitcoin, right? There's some people that don't realize that you can actually buy, a Satoshi or what have you. So anyways, I still think while there's been more adoption and understanding, I still think that there's a lot of growth ahead of us.
It reminds me of the 90s of the internet days, right? I think some people relate to sort of where we're seeing this growth factor right now. And in the mid to late 90s, as I was, using internet space and emails and stuff on a day-to-day basis between others who were in the space, everybody was like, what are you doing? And obviously after 2000 and sort of that growth period that we've seen over the years with the internet, I think we're already starting to see this massive adoption at a rate that's far greater than even the usage of the internet.
Absolutely. I wholeheartedly agree. Sort of two anecdotal examples I can relate to. When I first started my engineering science curriculum at Simon Fraser University, I remember, in the first week, this was 1998, we had to kind of create our student account on a completely text-based interface called Telnet. And, it was like MS-DOS basically. And you had to kind of understand how to programmatically interface with your with the sort of SFU information system. And you just had to figure it out back then, right? And so now nowadays everything is so slick and graphical, and people talk about UX and and so I think that, you know, we've guys like you and me, we've seen how far in leaps and bounds technology can go. And then the second example is when I was a radio frequency engineer at Sierra Wireless. You know, we were developing 2G, 3G, 4G, you know, years before it hit the market as a technology leader, doing research and development. And, you know, there was times when we were like, wow, we're developing wireless cellular products with so much bandwidth. Who even needs this much bandwidth? Because this was before the iPhone came out, right? Like I'm talking 2005, 2006, 2007, when people were still using flip phones with little LCD screens. And then it was right. And then it was the advent of, like, who needs streaming video in 2006 on your cell phone? Like, what are you even talking about, right? And then, of course, the advent of the iPhone and social media, it just flocked in. And so then you're starting to see, you know, new things that are a little bit more enmeshed with social fabric, like NFT, where you have, you know, Discord and community engagement, but it's all still rooted in blockchain technology. So I just think it's phenomenal. And to your point, exactly, it's absolutely like the internet in the 90s. So, you know, in 10 years, I hope you're still, you know, doing interviews, and let's reflect on this moment.
Yeah, it'd be interesting to see, to reference our conversation today and go back to where we are today, where we will be then. So, and you've had a great journey, an interesting journey. You've been involved in lots of things, and then I believe you started Fortress in 2017, sort of a green energy focused project, right?
Yeah. I mean, I was actually inspired by Hive in the summer of 2017. I was sort of looking, you know, I'd invested in some ICOs, and me and my friends had set up a crypto mine in BC, and small one, obviously, by today's standards. But you know, I read about Hive's story, and I was fascinated. And so I knew some guys that had built a 2-megawatt facility in Washington State that was hydro powered. And you know, I approached them. I said, guys, I had you know, engineering experience, R&D experience. I'd worked in commercial real estate, and so combining all those things, you know, I basically wrote an agreement and said, guys, like, you know, let's take this thing public. And so you know, I founded Fortress, raised the capital. We flew to Toronto, did the roadshow with the institutional desks on Bay Street, and it was an amazing journey. And so, but you know, Hive was the first one, and you know, they hit that $1 billion market cap, I think, within a few weeks of going public. It was a remarkable time, you know. And I remember one of the guys early on told me, one of the guys that built that was involved with our Washington facility, he says, Aydin, crypto mining, it's too complicated. Nobody would get it as a public company. Like, and I beg to differ, I think. And then Hive went public, and it was just like, it's you know, this is a thing, you know, it's here to stay. So yeah, that was the beginning of my journey into this sector.
That's great. And explain to me a little bit, man, to the viewers, the environmental conscious sort of crypto mining space. Is this sort of a play? Is there a purpose? Like, I know this is a big focus of yours to position Hive around this. How are you doing that? It's
about using renewable sources of power, and being mindful of your carbon footprint, right? So Hive is known as a green and clean crypto miner, right? It's all hydro, and actually in Iceland it's geothermal. I was in Iceland a few weeks ago to visit our facility out there. Absolutely remarkable landscape, Iceland. If you ever have a chance to visit,
I wanted to go for a long time.
Yeah. There's this place called the Blue Lagoon, actually, where the geothermal plant is, and it's just a quick note on that. You know, there's hot geothermal water underground, and there's this massive just plumes of steam, and in the distance you see the geothermal plant, and obviously that powers the region, and they've got a beautiful resort. It's all sort of molten lava that's hardened into rock formations, like you're on the moon. But anyways, the rest of Hive's operations are hydro. So I think that going forward, you know, I remember being in Miami at the Bitcoin conference, and Kevin O'Leary was hosting a panel that Frank was on, and he was talking about how there's $1 trillion of institutional capital in the U.S. that has a mandate to only invest in ESG qualified businesses, right? So, even if you were just a pure capitalist, there's still your incentive to be, ESG conscious, right? Is that's where the capital is going. So, you want to be a smart business, you got to evolve with the times, and then let's take a step back and consider the future just from a humanistic perspective, and that's just all the more reason. So I think it's a sensible and very real outlook to be ESG conscious in this sector.
So in the Bitcoin space, the mining industry, crypto mining space has gone through a lot of volatility the last couple of years. Maybe you could account for COVID, maybe you could say other things, lack of chips, technology, equipment, regulations. Where have you seen the biggest sort of challenges?
With respect to the biggest challenges that sort of come from an inherently volatile space, or I should say perhaps an apparently volatile space, the biggest challenge, which is intrinsic to the success of any business, is actually capital allocation, right? So one thing that, at least for publicly traded crypto miners, is a sensationalism when markets are bullish and you can easily raise money. That's sort of the worst time to deploy capital if you've been in this industry for any period of time. Everything costs 3 times as much in a bull market, right? The ASICs. I mean, literally, anyone that's in this industry, they know that the dollar per terahash cost of an ASIC miner is constantly adjusted by it. And I'm talking the MicroBTs, the Bitmains, Avalon, all the big players. They do this. It's industry practice. So if you're paying $100 a terahash for your ASIC miner, you're shooting yourself in the foot off the cuff. And similarly, if you're going out and you're prospecting for sites, and Bitcoin's at 50,000, everybody is suddenly aware of that, and so if they understand that you're in this crypto business, then they want to enjoy some of that premium and pass that cost on to you. So I would say that you have to be steadfast in your capital allocation, exercise discipline, and have the courage to expand in a down market when nobody cares about Bitcoin, and you're able to buy nice new generation ASICs for $30 a terahash, and then you've deployed them and your infrastructure is built and you're already hashing, so that when the bull market comes, all of a sudden your cash flow shoots up, and you're ROIing on your original capex, and now you're free cash flowing after your investment has been made, right? And that's like the cardinal rule of this entire industry, because people will raise money, they'll get caught up in the sensationalism, they'll deploy it at premium prices, and then they'll never ROI. And so, I mean, at the end of the day, we are running a business. We're also, supporting these blockchains that we do the proof of work mechanisms for, and so that's intrinsically important. But you have to be able to sustain as a business to be able to continue. So I think being smart about capital allocation, as the crypto prices fluctuate.
And recently, Ethereum sort of protocol changed a fair amount, which has affected some of the mining processes, et cetera. How is that sort of affecting you? What's the change in the mining process?
Yeah, so basically, the London hard fork, EIP 1559 came out, and what that did was there was a new construct, and I won't get into the deep details, although myself and the CTO and all the really technical people at HIVE, we very much enjoy digging into this, and we do our analytics. We study the rewards from the pools. How many Ethereum per mega hash are we earning on a daily basis? How does that compare on a fixed hash rate basis, given current difficulty before the London hard fork? Being mindful of transaction fees, because there's like a lot of moving parts. There's a lot of math. I'm a math guy, so I genuinely enjoy this job. But the punchline to all of this is that actually Ethereum mining economics. I was in Sweden a couple of weeks ago. At HIVE's a very large facility out there, the 20 megawatt site, and actually a bunch of us were in town, and we had a really great deep dive session, and we realized that in the 30 days following the London hard fork, and you compare the 30 days preceding, um, our Ethereum payouts were actually consistent, even though the difficulty had jumped up, right? So that actually tells you that economics had actually improved, right? Because difficulty went up, you expect average ETH payouts to go down. So although there was a lot of worry, there's still a lot of transaction fees, right? What the London hard fork did, it was preventing, like in sort of like Q2 of this year, we saw really crazy transaction fees on Ethereum, and it was meant to attenuate that, right? And I mean, those you had days where you had like extremely exorbitant fees, which, you know, as a miner, obviously you'll be like, wow, this is a lot of extra income that's a little bit of a bit of a stocking stuffer. But if you just look at like the fundamental metrics, no, Ethereum mining is still a lucrative business, and really I think it was just to make it more sustainable and draw more people to want to use the Ethereum blockchain for, you know, their smart contracts and so on and so forth. So although there was this great worry that it was going to dampen or undermine the proof of work, you know, being a very large Ethereum miner, accounting for over 1% of the entire network hash rate for Ethereum, we found that that's not the case, and Ethereum mining is still very economically, you know, sustainable and frankly profitable since the hard fork. So, yeah.
Interesting. That's great to hear. Great to hear. So, I mean, just from learning a little bit today, there's been a lot of firsts for Fortress and Hive. Sort of the first environmental social strategy, the first crypto miner for Bitcoin and Ethereum, first a number of first things, first public company. You know, what's next? What is next for the first for Hive?
Well, right now, you know, you've brought up some of the first. So in New Brunswick, we've got our site that we originally announced in January as a 50 megawatt acquisition, where we had the GP1 team that we also acquired some incredible intellectual capital. That the team is phenomenal, and they're now all my colleagues. We're one big happy family, and that was a 50 megawatt site. Working together, right, with Frank's leadership, we've now expanded that footprint of that site, and we have it will be a 70 megawatt site over 4 buildings. On one site, though, we've got a beautiful 50 megawatt transformer, and we've actually got our earnings call tomorrow, and we'll show some nice pictures. But to get to the 70 megawatt, we actually had a second large substation being delivered and installed. And so I don't want to give away our secret sauce, but, you know, we hope to have the largest single site crypto mining site in Canada, north of 100 megawatts eventually. And so, you know, we know some of the other companies collectively are over 100 megawatts, but I'm talking about one single campus, one single site. And it's actually quite a marvel, because you have, you know, the intersect of engineering, you know, construction, and just sort of that je ne sais quoi of having, how do you build a really smart, energy efficient and sustainable crypto mining campus at scale, right? Because there's other factors that you have to start taking into effect when there's so much energy flowing, and, you know, even in thermodynamics and so forth. So that, I think, is an exciting first. And so, and I would even say we're the first truly global publicly traded crypto miner, you know, with operations in 3 countries, and so, you know, Sweden, Iceland, and Canada. And so and in addition, as you mentioned, you know, first Bitcoin and Ethereum miner scale, first company to go public, and first green and clean, right? So, you know, Frank's a great visionary, and so, you know, it's about growing the business sustainably and being at the forefront. So, yeah, there you go.
I'm excited to hear about what size that becomes and where you guys get to. You mentioned you're in 3 different countries now. From a regulatory standpoint, you also kind of mentioned stability of government. From a regulation standpoint, where do you see innovation supporting, encouraging sort of that space for not just the mining space, the whole crypto market?
Yeah, I think that, as a company that's started with its listing on the TSXV, as frankly, all of the, except for maybe Riot Marathon, which are, we're listed in the US, all the other big players, the Bitfarms and Hut 8s of the world, who we've all got camaraderie with, we've known each other for years. We deal with the CPAB, and that's the regulatory body that oversees the auditors in Canada. And in fact, they've got an event in October. I'm going to be on that panel. And I think that they just need to understand best practices in the industry and relax a little bit. In 2019, they came out and, a lot of the big firms felt that crypto audits were too difficult. Well, guess what? I've led 3 crypto audits, filed them on time, and nothing's impossible, right? Like and the thing is, this industry is so inherently, you can define everything quantitatively to such a good degree of accuracy. It's almost the ideal business to audit. They just need to understand the axioms. And once they can accept those axioms, like, early on, they were like, well, we can't rely on blockchain.com because that's technically a third-party website and it needs a SOC 2 compliance report. It's like, okay, well, you know what? Gemini ended up getting a SOC 2, right? And I'm sure, these, and then, blockchain.com was, raising huge amounts of money. So I think it was just sort of the people that, the professional service providers that maybe, serve clients in so many different sectors. You can't expect them to immediately have expertise in something right off the bat. But I think they're slowly warming up to it. So I think the regulatory framework is evolving. And as a very technical guy, I always welcome. I like to engage regulators and in a collaborative educational thing, right? Because there's nothing untoward or scary, right? I mean, it's great technology, right? So. Of course, always the bankers are always very friendly. They're always there. The bankers want to see this industry succeed. So, the investment bankers, I should say. It's the retail side of banking that's still a bit skittish. Yeah.
I knew you accomplished some great things. Before I let you go, though, what changes do you see? What changes do you want to see happen in this industry?
In the past 20, 30 years, manufacturing has sort of moved offshore. But I think that if, because, cryptocurrency, Bitcoin, Ethereum, you could look at them as energy-backed currencies, right? And I think that if, the Warren Buffetts of the world, the people that maybe aren't so crypto friendly, realize that Bitcoin and Ethereum are energy-backed currencies. If you talk to really smart guys in the space, I think they would agree that it is an energy-backed currency. If they embrace proof of work, if they embraced this sector, I think, and don't get me wrong, I mean, we've obviously had great amount of success finding communities that were welcoming, and we've scaled and we've brought economic activity, we hire local and all that great stuff. But I think broadly, there's still some unfamiliarity, but I think with time, I mean, if I could have a wish list, I think it would just be like, hey, everybody, understand that this technology is here to stay. It's great, it's helpful, and using where we have abundances of energy to really help foster the growth of this sector and bring more economic activity throughout North America. I think would be really nice,
And last question, just because it's interesting to me, you're probably one of the largest mining industry spaces and businesses that's out there. And there's a few other, you mentioned a few of the Bitmains and a few other groups and stuff like that. What kind of advice would you give to somebody who's all of a sudden they want to be a Bitcoin miner?
Well, I think that anyone can be a Bitcoin miner if they want to, buy some hardware, safely build out a little bit of a electrical infrastructure, You've obviously got to have, you know, a operating cost that allows you to be competitive and continue operating during a bear market. But I would say understand the math behind, understand how it works, you know, understand hash rate economics, right? I'm a big advocate of that. Understanding, you know, what dollar per terahash are you earning on a daily basis, understanding what your OPEX is in a dollar per kilowatt hour, and then actually taking your revenue and converting it in a dollar per kilowatt hour. And if you can intrinsically understand that, you know, I talked about how quantitative this industry can be. If you can understand that, and you can underwrite your own risk and say, you know what, if I you know, spent this much money buying hardware and, you know, doing a little bit of electrical setup, I think I could ROI in 6, 9, or 13 months. And you know, if you understand that there's inherent market fluctuations and you can hang on. And by the way, you know, understand what's your strategy. Are you going to hodl? Are you just going to sell some coins to pay for your OPEX? Those are the questions that I would encourage someone. And you know, there's great resources online. I mean, I taught myself. We all had to self-teach, self-learn early in this days, right? You know, I would spend late nights, you know, making my own Excel tables, downloading information from, you know, all the analytic websites like etherscan.io and blockchain.com, and constitute my own historical data sets and understand the interactions between what your revenue looks like when you consider price and difficulties. And if you enjoy that kind of stuff, then this is probably for you. And if everything I said just sounds like a complete bore, then maybe don't get into, maybe just buy some Bitcoin and Ethereum and just hodl. Yeah.
It doesn't sound very easy at all, Aydin, but I'm sure that some people will be excited, interested, and I'm sure they'll probably be reaching out to you for some advice, as I'm sure you would be available. Not too much, but I'm sure you'd probably be open to helping others. So, but I really appreciate your time today. You've helped me kind of get a good sense of Hive, even more so than my conversation with Frank. But you know, it's great to give a good insight, get a better understanding of what you guys are doing. So great to see the social element and the environmental side of things. It's so important, I think, for the world. So I appreciate the time today.
Thank you. And you had great questions, Jason. It was a very intellectual conversation. And it's always great to, you know, share a space with people that have been in the industry for a while and really understand it. So thank you for having me. It's been a pleasure.
I'm sure we'll talk to you soon.
Yeah. All right. All the best.
All right, everybody. That's a wrap. Thank you for joining the Off the Ledger podcast today. Remember to listen to the newest podcast wherever you regularly listen to podcasts. Thank you very much. Have a great day.